The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 24th fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on fantastic and fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 52 points at 20,758. S&P is down 5 at 2358. NDX 100 off about $12. The NASDAQ Composite off a similar amount. Russell 2000 off 3 points. That's the one where we're going to really focus on this afternoon. We're going to take a look at that, try to break that down. She's trading at 1391. Semiconductors are off $5. New York Stock Exchange down about 0.4%. Net advancing or net declining issues has taken its advanced decline oscillator reading down below zero. So now we're just kind of eliminating one checkbox at a time for the market to be able to give us a confirming signal as to what it wants to do. So we'll take a look at that as well. Gold is up $6, trading at $12.57. Silver is up 22 pennies. That's up 1.25%. As we speak. Leading the charge here to the upside, you've got Universal Display Corp, OLED, up 20%. That's a whopping 13 buckaroonies. Applied Optoelectronics, I think I got that right, AAOI, and Mr. Bill wants a target on that, so we'll take a look at that for him. That's up 30%, $11 and change. RH, I don't know what RH is, but they're up 26%. Insight Corp up 7%, $8 or so. Intuit is up about 5.5% or $6.50. To the downside, it is Priceline off about $10. Amazon is down about 10. Baidu off 9. Acacia Communications off $8.50. Magellan Health down $5, and Chipotle is off 5 as well. But I want to know what you want to look at. But let's first start off by trying to figure out what is the message of the markets as of 1:09 in the afternoon, and what is it that we want to watch. Really boils down to just a handful of items. If we take, like I mentioned, that the net declining issues inside of the New York Stock Exchange, by the way, that number as we speak right now is minus 384. So that, so the advancing issues, 1247, declining issues, 1632, roughly right about there. Now, with declining issues leading advancing issues, what that has done, it has taken our advanced decline oscillator reading, the difference between the 19 and 39-day moving average, exponential moving average of the data, takes us down below zero. Now, when you get down below zero, this is a New York Stock Exchange that we're taking a look at. The meaning behind it, not necessarily on day one, but the meaning behind it is this is territory where the bears should be in control. Just as a general example, if we take a ride on the reading, in other words, we go back into about September 29, 2016, you saw that the advanced decline oscillator reading stayed below zero, and the market went ahead and declined. Right? It declined because, in fact, it was sellers who had control. Sometimes you see it spurt just a little bit above, then just a little bit below. There's some meanings behind that. We don't want to worry about that as we speak right now, but it is important. One, just like in a football game, let's say you recover a turnover, you don't want to turn the ball over on the very next play. So staying below the zero line is important. Now, the good thing about this is that we've got the NASDAQ composite that would be day 2 below the zero line. And I would say the NASDAQ composite, the better indice out here, I don't know if it's better, but a large enough indice out here to say, okay, change in trend there. Looks like a change in trend. Looks like we won't know until the end of the day. This is an end of day reading out here. But as we speak right now, it's below zero. Now, the cool thing is, you might say, well, Steve, I don't actually have access to net advancing, net declining issues out here. So how am I going to know at 359 whether the market has changed its trend? And that's a great question, and I can answer that for you. Because you see, with it being below zero right now, with the NASDAQ composite being below zero, there is only one thing that you have to focus on, and that's going to be the spot VIX index. Why? Because as we speak right now, it is trading below zero. That is not unusual. It's basically been below zero since November the 9th out here. And if it closes, not zero, below the 50-day exponential moving average, and therefore, if in fact the spot VIX index starts to move higher, pretty darn good chance, PDC, not PDG, but pretty darn good chance, or PDGC, something like that, that what we will see is that, though, you don't have to worry about whether what the net advancing or declining issues are. Things will deteriorate in the market. And if the VIX index is unable to close below or above 1191, by the way, that's the calculation right now as of 1:12 in the afternoon. That's the number. That is the only number that you really need to be paying attention to, in my opinion out here. So 1191. If the spot VIX index closes below that level, you've got a neutral to bullish message out here. You do not have a bearish message signal. So that's all that you've got to pay attention to. Why don't we just say it's happy hour somewhere and let's go get happy? Nah, let's not do that. Let's spend the next 45 minutes together, and then together, and I'll buy the first round, we can go out for happy hour out there. I'm good with starting my afternoon early on a Friday. How about you? Yeah, I'm sure that you are as well. What else do we want to pay attention to? I mentioned the Russell 2000. And the reason that we want to pay attention to the Russell 2000 is because it has been the weak indice out here. However, I take you back to earlier this morning as the markets were moving lower. You probably thought, hey, this is it. They're just simply going to crater. However, what you and I knew was that by the 9:30 open, we could see that this is the 30-minute chart here for the Russell 2000. It had formed one of or two of your favorite patterns out here. One, that it moved lower in 7 waves, identified as letter G on my system, and it was doing so with less relative energy. Therefore, you've got that nice little black line. And that, in fact, did mark the bottom. So the weak indice has identified a bottoming pattern. So where is it going to go? Let's take a look at that when we get back from the break. And then for Mr. Bill, we're going to go take a look at, what was it? AAOI and CF. And he'd like some targets on that. But we're going to go take a look at what do we have to focus on with regard to the Russell 2000 and all of the 30-minute charts for the equity futures contract. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on.
Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 52, S&P is down 5 points. So I think the other area, those of you that certainly are intraday traders or those that are wondering are saying, well, Steve, can't you just answer the question, how is this going to turn out at the end of the day? And I'll do my best to answer that question. What I can do is I can provide you with the numbers. I can provide you with levels that should give us a pretty good signal. Now, we took a look at the Russell 2000, and we looked at that 30-minute chart. So it's important to stay within that same 30-minute time frame. The question is, where did I put that? Okay, so we're here right now. Remember, I have a 10-minute delay on this, just because I'm a little cheap in that way. I'm okay with 10-minute delay because I really don't trade the Russell 2000 futures contract, so it's not a big deal. Now, here's what we want to pay attention to inside the Russell 2000. During the last hour, there's a brand new market profile that formed. And if we take a look at that profile, I'm going to go ahead and turn price off. So this is really important. We'll turn price off. And what we can see about this profile out here, see the little cyan, the blue little line out here, the green line at the bottom of the box, the red line being the top of the box. See how this is lined up and suggests that sellers are in control of this price area. The price area being 1390 down to 1383. As long as price does not close above 1390, this full area ought to be explored. Will it be explored by 4 o'clock or 2? Or I can't answer that. But it should be explored, meaning that price should move down to the 1383. Price just has to get below 1388. The question will be, will that level get broken? Just like at the top, if the 1390 gets broken through, gets tested, comes back, and price stays above it, that would be a bullish message. I would say to me, price heads to 1395. Now, we'll go ahead and put price back up on the screen out here, and we can see that it's really sitting right at that point of control, the center of that box, the 1388. So it's not giving us a clue, but once it, and it may, because I've got a 10-minute delay here, by the way, so you would actually, if you've got live data, then you would know if it's trading below 1388, says 1383 is on the way. That's one of the numbers to take a look at. But remember, we took a look at a seventh wave move. We took a look at price moving lower, doing less relative energy out there. Good trampolines. Now, we've seen a counter trend rally thus far. Why a counter trend rally? Well, shoot, look at the waterfall cascade from about 9:30 yesterday. Right? You have not even gotten back to the top of the swing point on the bounce that took place at 12:30 yesterday. So this can be concluded that it is nothing. All we have seen is a counter trend rally. Now, if the lows of the day get taken out, that means that very bullish patterns failed. And you know the expression, there is nothing more bearish than a failed bullish pattern. Now, with regard to the other equity futures contracts, let's take the ES Mini as an example. We can also see, I'll go ahead and turn price off, so you can see that the point of control, which is at 23.57, much closer to the top of the box, 23.59, versus the bottom at 23.50. So that's a decent move out there. That's another 7-point move to the downside. Now, should this unfold, then there's a really good chance that you will see the spot VIX index, doesn't guarantee it, but you would see the spot VIX index get above that 50-day exponential moving average line. Of course, this is all going to be at the end of the day, where do things trade down to? But we can see the top of this box is acting as it should be, which is significant resistance. That means any move today, a close above on a 30-minute bar basis, 23.59, says shoot. Or it doesn't say shoot, it just says price will go ahead and run higher. Otherwise, this entire area, this entire price area should be explored, that being 23.50. The NQ is set up the same way, right? If we take a look at its profile, and the NQ looks about just as weak as the Russell 2000, right? Has not even made it back to its 3 o'clock in the afternoon yesterday's swing point high. We can see that this TAS profile box is set up where the sellers should be in control in the price area 53.27 to 53.07. So the good news is we have the parameters. It is as if you and I are playing the football game and we already know the plays that are going to be called by the other team. And we already know what actions we should take. This is dependent upon what time frames it is you're trading. If one of these areas fails to hold as resistance, if you're short, or if you're long, you certainly want to be able to see 53.07 hold as support out there. So that is what I would be looking at. It's nice to know what the teams are doing out here. Now we just have to see how do the plays unfold. And let's face it, you have played games against other opponents out there, maybe tennis players. There's a lot of tennis fans in the audience, and you know where that your opponent is going to hit the ball. Just because he's going to hit it or she's going to hit it there doesn't mean that you can return that volley. All right, so let's go take a look at the levels that folks want, or levels, the instruments that have been requested thus far. And I got to get, so CF is one of them. So let's go take a look at CF and see what we can see on it. This is CF Holdings out here, and here is what we know as of today. Does not look very good for CF Holdings. Now, the reason that you and I say that is because price is trading below its weekly profile level. Yesterday was a test of that area with increasing volume as it was moving down there. That was also moving into a little bit of a breakout area. This gap here, remember, gaps are your friends, 7.9 million shares, but yesterday's move lower, 7.9 million shares. What does that tell us? Ordinarily, it would say to us, you've come back to a breakout area with similar volume. We have a consolidation move going on. Now, that would have made sense with regard to yesterday's call because price stopped and found support at the bottom of its weekly profile. But now what we are seeing is a move below that area, albeit on lighter volume. It doesn't matter. It is below a significant level of support. And if this trades below 31.75, then Mr. Bill was saying, what is the target? Now, what we don't have out here, Mr. Bill, is an A to B equals CD pattern. We don't have another profile that we can take a look at. And we really don't have a breakout that we can rely upon, a volume bar that we can say price would head back to. The if we go to the left side of the chart, the next volume bar really shows up at December 16th. And your eyes and my eyes and everybody else's eyes would have gone there anyways, because we would have looked for that cluster. Now, don't think about that cluster of candles out here that built a base and said price would then likely target as a next area the level of about $27 to $29 out there. So it looks like that is where it is headed to next. Not that it can't go lower and test this high volume low out here from November the 3rd. So that's my analysis of CF Holdings and what it wants to do. Now, if for some reason today it closes back above 31.75, then a la mode, the consolidation is in effect. And you would expect to see this thing try to travel all the way back up to the highs. But that is not the forecast that we can give you as we speak right now. The other instrument was AAOI. Let's go take a look at its targets. This is Applied Optoelectronics. And this thing has got huge, and I do mean huge, sign of strength. This has got 5.2 million shares already today. This is after another sign of strength, a gap to the upside, a wide-ranging bar. They are basically the same thing. Only gaps give us two different levels of support or resistance. In this case here, when we get back from the break, we'll try to figure out, we'll see if it's even possible, humanly possible, to figure out where Applied Optoelectronics is headed to. I don't think it's going to be easy to do. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
welcome back, folks. We were taking a look at ticker symbol AAOI. That's Applied Optoelectronics. And one of our dentists, Mr. Bill, wants me to give him a price target. And as you take a look at this stock chart here, you basically say it's nearly impossible to do. However, what we can do is we can see that since its IPO back here in 2013, we can clearly see a consolidation type pattern. When a consolidation is broken, which it was last month, then you have a measured move equal to or greater than the consolidation. And as if we take a look at it right now, interestingly enough, Mr. Bill, it's at the top of its consolidation box. So there is nothing else that I can look at that says that this is where this is going to peter out. I don't even know where that came from, by the way. You've all heard that expression, and now I should go look it up to figure that out here. But we'll just call it poop out, although, geez, that's not a very good expression either. But it's completed its measured move. For all intents and purposes, and you're right about it blowing through one of Tom DeMarc's counts. Actually, the one that I was looking at that it blew through yesterday was the 9 count, the setup, the TD setup, which occurred yesterday. And price broke above that, so it says higher, and that would have been the answer I would have given you, with the exception of the fact that this has completed its measured move. So this may be it for a while out there. Hope that helps you. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm very well, Steve. Wanted to ask you just a bit about parameters on the S&P 500 index.
Absolutely.
Now, I apologize. I didn't catch the first 15 minutes of your show, so if you already addressed this, I apologize in advance. But if the S&P is carving out at least a short-term high with a pullback coming,
yes.
My first question is, or actually I'll put it together, if we get a pullback of some sort, would it be your speculation it would be a dip prior to higher highs? And combined with that, if we do dip down, I'm wondering, when you look at things, which prior swing low would you be looking at to say, that's a swing low off of which I'll calculate my fib retracement marks to look for particular support? And you could say, well, the January 34th swing low would be one candidate. You could go December 28th. You could go back further in time. So if you could address that or just share your thoughts on those subjects, I'd appreciate it.
Okay, so the first thing that I will be watching for in the S&P is if we don't see the S&P trade to a lower low today, and the level that I would specifically be looking for is the high of February 17th. And specifically, that is 2351.16. And so far, the low today is 2352.87. So today, if price does not trade below that, what it does set up is the possibility, if there is a gap down on Monday, for an island top at all-time highs. Now, that can be a very bearish signal. In this marketplace, we recently had a similar island reversal top out here. That was between the trading session of January 25th, the 6th, and the 27th, and it was the prior session. So it was the 24th and it was the 30th that set up that island top. That did not last for too long out there. But nonetheless, that would be one of the things that I would be looking for. If we were to get that, if that were to hold, then for retracement purposes, my eyes would just simply go back to the November 4th area where we saw a significant change in trend. And if I pull this back a bit out here, let me just pull that back. We had, although it took a while, but really the S&P formed a top basically in August of 2016, and then finally meandered down to the low of November the 4th out there. So that would be the area that I would be taking a look at. And then that brings about targets of 2259 and 2192 as the areas that I would be most watching for some type of price projection. So I don't know what we're going to get today. Now, if today it trades lower and it simply cuts off that there's no formation of an island top, does that mean that price can't trade back to these levels? No, the answer is no. Not at all. I think the important thing today, John, is for us to see if, in fact, the market, the S&P specifically, was going to give us a signal that a topping pattern has been confirmed. We will see the VIX index close the day above its 50-day exponential moving average of 1192 right now. I think when the show opened, it was at 1191. And so those are the things that I would be looking for. I would also be looking for time as one of my mechanisms. I'm anticipating that the markets will move lower into the early part of April. I don't know what the extent of the decline will be, but if my timing models begin to actually work again, then April 7th is actually the target date that I would be looking for. The other area to be watching inside the S&P 500 today, is it a potential top, or is it just a little bit of a sideways retracement that's going on, would be its oscillator unchanged line. And so far today, we're trading really right on it. That's the red line that is on my chart. And the actual number of that, let me pull that up for you as we speak, that we want to be watching is going to be 2356.09. So if the S&P can close below that today and the VIX index is able to close above its 50-day, those would be some pretty good topping signals out there, at least enough to go ahead and have risk on for that type of a trade. Does that help?
Yeah, no, that's real thorough. Gives me the parameters I was looking for. Could I lastly just ask you, and I'll sign off, but I've been wondering about the T-note and T-bond futures, ZN and ZB respectively.
You and me both.
I'm just wondering if you can pull up the weekly charts on one or the other and answer the question, assuming, and I don't want to say this assumption is good, but assuming the rally that we've had the past number of days extends higher, where would be the spot that you'd see as being a candidate to look for a turn back down? And that is just assuming we do extend the rally, and also assuming the rally is just a bounce in a bear market. And, of course, both those assumptions could be dead wrong, I understand.
Sure. So I will tell you there is an interesting pattern inside of the 30-year. Now, I have the continuous contract up on my screen because this way I can at least show you the pattern that has formed out here going all the way back into May of 2016. And that's a beautiful thing because once patterns begin to form and they continue, you just simply go with that pattern cycle out here because it's great information as to what's really going on. Why they work, sometimes I don't know. I just know that they do. And if we take a look at now, what I'm looking at right now is what's referred to, John, as the short-term price oscillator. So this is utilizing the MACD tool in essence to take a look at the difference between the 3 and the 9 period exponential moving averages. Now I'm looking at the bottom of the screen, and you see these wedges that have formed here. So that is going to be one of the first clues, and we can see that short-term price oscillator getting up towards the top of its wedge pattern right now. We're about to learn something over the course of the next few trading sessions. We got to go to break, but if you're going to hang up, I'll go ahead through this chart for you as well. This is Steve Rhodes with TFNN. You bet. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Now, hey, on Monday, I'm going to have a special guest on with me for at least a couple of segments. Many of you know him. You've probably seen him on CNBC all the time. Louis Navalier, who's really kind of the stock picker of stock pickers out there. He's got about $2.5 billion or so under management. And so if there are some questions that you would like Louis to be able to answer for you, I mean, certainly you can call into the show. That's cool. But ahead of time, for many of you, you're working, you listen to the archives and so forth. If there's some specific questions that you would like Louis to address, just go ahead and send me an email, steve@tfnn.com. Just make sure up in that subject line, big, bold, capital letters, put something like Trader's Edge, put Louis Navalier, put something there, because literally, I'm telling you, I get at least it seems like there's 1,000 emails that end up going into junk boxes and stuff like that. And even though I try to make sure I get to everyone's email, many times I don't even see it because I can't look through each one. So just if you put some big thing in the heading that's going to stand out, then I'll be able to look at it. Okay, so enough about that. Let's go back to the question that John and Philly had with regard to the Treasury bond. And I was sharing with you, I shared this with subscribers earlier in the week out here, this very interesting pattern. Now, normally you and I take a look at a price oscillator, and I look at the 19 and 39-day exponential moving averages. In this case here, this is referred to as the short-term price oscillator. And what you can see here are all these descending tops and ascending bottoms out here that form these wedge patterns. Now, just knowing that, and this is how we put these tools together, just knowing that wouldn't be good enough to give you an inclination as to when it breaks, where price is going to go. At least I don't believe that. In this case here, with regard to, we can see that the 30-year Treasury is trading higher, should continue to trade a bit higher as price makes its way up to the top of that descending trend line that is out there. Now, we can also see in the price area of the screen here, John, that this is a daily chart we're looking at, that price is well above my oscillator unchanged line. Now, that is using the 19 and the 39-day exponential moving averages. And we're putting together a short-term oscillator and just a regular, normal, daily price oscillator reading. When price is above it, the message is that the buyers are in control. The message is that it can be bullish to very bullish, depending on whether it's above zero or not. And I don't have the answer. I can give you the answer, but I don't have it on my displayed on my screen here just yet. The more important thing is that if, in fact, this short-term price oscillator breaks to the upside, if it breaks to the upside, breaks above that trend line, then, John, the next move is going to be higher. And it is probably the Treasury, the 30-year, is likely going to go ahead and take out its previous highs out here in the 154 area. And go ahead and complete an A to B equals CD to the upside. If we take a look at that A to B, at least an A to B equals CD to the upside. I would say maybe even larger than that. Here is the current contract that's traded. So the 1-to-1 takes you up to 155.78. The 1.27, 157.64 area. Now, the reason I've been so focused on this is because I haven't been able to figure out why it is, I mentioned this yesterday, I believe, why it is that commercial traders are net long the 30-year treasuries out here. I mean, to a substantial degree out here. So they are suggesting to you and I that they are anticipating that the 30-year Treasury is going to trade higher. The only thing I could figure is it's Tom that has all those futures contracts out there. That he represents the entire commercial traders. No, I'm just kidding about that. But I know that his outlook on this is that he sees the 30-year Treasury moving higher because of the tools that he uses out here. The commercial traders are taking the position that that is the case. And I've been trying to go back and figure out where is there a pattern that I can come up with that would help me to navigate this. Likewise, if there was, and what we could also see here, John, and everybody else, all you tigers and tigresses, is we can also see the 30-year turn down from here. Or maybe it's Monday, right? Not take out these swing points, because these are important swing points. There's a little shooting star out here from January the 12th. So that clearly is marked resistance. You can see a little bearish engulfing candle here on February 9th. So we clearly can see the resistance level out here that is trading into. So the other possibility is that it turns down. And if it does turn down, meaning the short-term price oscillator, price turns down as well. If it busts it out to the bottom, and we see price get below the price oscillator, the price oscillator unchanged line, the 151.29 area, Stevie's red line out here, then, John, prices are headed lower. Now, I know you like to be able to sell highs and buy lows or retracements thereof out here. This is not doing that for you. Where is the resistance zone? I set it right up here at the little shooting star. Let me be specific out here. And that is right now what is the potential B point, 153.97, and that is the trading session of January 12th. So that's what you should be looking for. But boy, if that short-term price oscillator breaks above that descending trend line, my money's on being long the 30-year Treasury. We're not there just yet. So I hope that answers your question. Kind of fairly detail-oriented, but I mean, I don't think you want me just pulling something out of my you-know-where and not understanding why I could possibly come up with a conclusion like that. Now, we've got a question here from Aaron, who wants to take a look at CLF. So, Aaron, thanks for listening to the show. Let's go take a look at CLF, see if we can figure out where this thing is trading to. Now, this is pulling back today into a breakout area, but that alone is not going to necessarily give us all the information we need. So let's take a look at it. So CLF, you say, I'm long CLF around 850. I was hoping to hold it long term. Could you please look at it for me? So you're in at 850. This is trading at 1078. By the way, nice trade out here. This thing is pulling back into the area that it most recently broke out of. That was on the February 9th trading session. There were 91 million shares. You're pulling back with light volume, 13 million shares. Even yesterday, which was a big price bar to the downside, it did have some accelerating volume, but only 35 million shares. And today, price is off of the gas out here. So this says what you don't want to see this do is get what you really probably don't want to see this do is pull all the way back to the lower swing point from January 3rd, which is at $8.28, because I'm pretty sure you don't want to let a winning trade turn into a losing trade. So now what do you do? Well, there's no reason that I can find to sell, but you said you wanted to hold on to this long term. So what that means to me is I really just need to switch over and take a look at the weekly chart. So let's do that. I'm also going to put it on my other platform just to see if there's anything else that I can find out here. And boy, you put this thing on a weekly chart and it's just basically downright disgusting, is it not? That is being CLF. But let's put some profiles out here as well. Let's see where we're at in relationship to the weekly profiles. The daily are going to pop up here as well. You know what? I'm just going to switch back to the daily just for a moment. It'll widen the profiles. We'll be able to see where they're at. So, yeah, this is your conundrum. So on the bullish side, price is above the bottom of the box. It's stuck in this little tight range out here, and the conundrum is it's trading into the top of the weekly profile out here. You really want to see this thing trade above 1090. So far today, that has been resistance. We come back from this break. We'll take another quick look at it. I'll see if there's any other requests out there. It's Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're talking about Cliff's Natural Resources for Aaron, who's in this trade at about $8.80. Now, Aaron, I've got the weekly chart up on my screen for you. And so that number that I gave you, which was the top of the weekly box, was $10.90. Ideally, you'd love to see it close above that. You're at $10.81 today. Don't know whether it will or it won't. If it doesn't, does that mean that it's going to be pulling back? As long as it continues to trade above $10.32, that is its brand new TAS daily box, and you're okay. So, but that's what you should anticipate. If price gets below 1032, then 1021 becomes the next target. Now, that 1021 number is going to go ahead and change over time. That 1021 number is my weekly oscillator unchanged line. That is the red line out here. And all looks really pretty good, except for the fact that price has been moving higher, doing it with less relative strength. There's no wave count out here that you have to be concerned with. What you need to be concerned with is the mere fact that price is moving higher, doing it with less relative strength. Last time that we haven't seen that pattern yet form here, and you do have a confirmation this week, because last week was an absolute doji candle. This week you've engulfed that candle. Pretty easy to do. But watch $10.21 specifically. If it drops below that, right back to me, call into the show, something like that. Where would you be then targeting? $8.50. Which is the bottom of the weekly box. So your entry price is where this would likely target. Do you exit, take your profit, try to buy back in at $8.50? With this bearish signal out here, and then he closed below 1021. I would certainly use some type of trailing stop, if not just going ahead and taking your profits out there. So that's what I see intermediate term by taking a look at the weekly chart. Now, the interesting thing here is there was a question in the den who Danny was asking, do solar eclipses mean anything in my studies? And what I did many years ago, Danny, many years ago, was I took the ephemeris, where we have all of the planetary and lunar data that one could want, and I digitally obtained that data, paid some really good money for it, because I was looking for, can the planets or the moons or anything give us a reliable edge out there? And in doing that work, I found the answer to be no, not really. Something that worked at one point in time didn't seem to work consistently. And I'm being consistent, right? And during that, and I was pretty bummed, because it was a lot of hours worth of work, and it was some good money that was spent to write the program, to take each of those things and throw them on a chart, and so on and so forth. What I did find, though, is it led me to this pattern here, the one that we just took a look at, the one that Aaron and I just took a look at, which is more consistent at every market turn, at every single market turn out here. I'm not saying that the aspects don't work. That is not at all what I'm saying. What I'm saying is that I could not find something consistent to actually answer your question about whether solar eclipses work or not. We've got a minute to go, but let's go to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you?
Great, Steve. I'm looking at Freeport McMoran.
Okay.
I see we've gone down 10 days in a row, and it looks like the volume from my chart, it looks like we may be testing the low that we had, 2 months ago?
We are testing the low here, and we're doing it, I think, with volume. That low had 16 million shares, and we're at 17 million shares right now. This is going to very likely head down to $12.48 as your next area.
I saw that big gap there, so it'll probably get down into that area.
It's pulling back with too much volume as we speak right now. So the other thing you got to do, and I don't have the time because we're out of time, is to go look at the Australian dollar. But if you remind me on Monday, I'd be happy to go take a look at this for you.
Okay, thanks, Steve, and thanks for everything you do for us.
You bet. Have a great weekend. Folks, you all do the same. We'll see you on Monday with Louis Navalier. So if you've got any questions, go ahead and send me an email, steve@tfnn.com. Otherwise, have a great weekend. We'll see you on Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.